All right, let's kick off our deep dive into economics. I know you're looking to get a grip on some of those core economic ideas.
Yeah.
We've got some really interesting stuff to work with here.
It's a fascinating area.
Yeah, it really is.
Economics is all about human behavior. It's a social science, really.
Okay.
But here's the thing. You can't run those neat, controlled experiments like you can in, say, a chemistry lab.
Ah, I
The
see.
real world is our lab, and it's always changing.
It's like trying to solve a puzzle where the pieces keep shifting around as you go.
Exactly.
So how do economists even begin to make sense of it all when it's like that?
Well, that's where we bring in economic models.
Right.
They're like simplified versions of these really complex economic ideas.
Okay.
Think of them as maps to help us navigate the economic landscape.
So the models help us see the big picture.
Yeah,
But what about all those little details, those things that make real life so unpredictable? How do we account for those?
that's where ceteris paribus comes in.
Ceteris paribus.
In Latin, it basically means all other things being equal.
Ah, okay.
Imagine you're testing, let's say, a new fertilizer on a plant.
Okay.
To really know if it works, you'd want to keep everything else the same.
Right.
The sunlight, the water, the soil, all constant. That's ceteris paribus in action.
So it's like isolating the one thing you're looking at.
Exactly.
That makes sense.
Yeah.
But even with those models and ceteris paribus, things don't always go as planned, right?
Absolutely not.
Yeah.
The classic example is law of demand. It basically says when prices go up, demand goes down.
Oh, okay, makes sense.
But then you look at luxury brands. Sometimes the higher the price tag, the more people want it.
Wow, that's interesting.
It's almost like they're defying economic gravity.
All right.
So yeah, human behavior can really shake things up.
Yeah, that's so true. It can throw a wrench into those neat theories.
Definitely.
Yeah.
And that's what makes economics so dynamic and sometimes a bit frustrating. Remember the 2008 financial crisis?
Oh, how could I forget? It felt like the whole world was about to, I don't know, just collapse. What was it about that crisis that really shook things up in economics?
Well, you see, before 2008, a lot of those economic models really leaned on this idea that markets were like inherently efficient.
Okay.
They thought the market would self-correct.
Hmm.
But then the crisis happened, and it exposed the flaws in those assumptions.
So the models were missing something.
Yeah, they didn't account for things like human psychology
Mm.
or the sheer complexity of those financial instruments.
Okay.
And they really underestimated how interconnected the global economy truly is.
So they were missing that human element, all the messy unpredictability of how we act.
Exactly. 2008 forced economists to go back and rethink things, to incorporate things like behavioral economics, risk management, and, well, the reality of how interlinked global finance really is.
So it's like economics had to, well, evolve to catch up to the real world.
Precisely. It's always being refined and adapted.
That makes sense.
Yeah.
Okay, so we've got these models and theories, but it seems like economics is also full of opinions. How do we separate fact from opinion in this field?
That's where the distinction between positive and normative statements comes in.
Okay, tell me more about that.
A positive statement is something you can test, like a scientific observation. The UK's unemployment rate is currently 4%. You can check the data and see if it's true.
So it's all about the evidence.
Right. Now, those opinions that creep into economic discussions, those are normative statements.
I see.
They're often about what should be done. For example, the government should raise the minimum wage.
Okay.
That's based on someone's values, not pure data.
So one is about what is, and the other is about what we think should be.
Exactly. And that difference is crucial
Yeah, why is it so crucial?
because it helps you analyze arguments,
Mm.
more critically. You see through those hidden agendas when you can spot the difference between a fact and an opinion disguised as a fact.
It's like a superpower.
Right.
Now, let's talk about this economic problem everyone keeps mentioning. What's that all about?
Well, at its core, the economic problem boils down to this. We have unlimited wants, but the resources to satisfy those wants are limited. We always want more things, more experiences, more time, but we just can't have it all.
It's that classic dilemma. We can't just create more resources out of thin air. So how do we decide what to give up?
That's where opportunity cost comes into play.
Opportunity cost.
Yeah, it's the value of the next best thing you have to give up when you make a choice. So, for example, imagine you're deciding between going to college or starting a business right after high school.
Okay, tough choice.
Right. Both have their potential benefits, but you can only pick one.
Right.
If you go to college, the opportunity cost is Well, the income and experience you might have gotten from starting that business.
If you start the business, you miss out on the education and personal growth of college.
Exactly. Every decision has a hidden cost, the opportunity cost.
Wow, that's powerful. It's not just what you gain, but also what you let go of. It's like every choice has a hidden price tag.
Yeah, you could say that.
So we're always juggling these limited resources, but what exactly are these resources? What are we talking about here?
Economists call them the factors of production. Think of them as the ingredients for everything we produce and consume.
Factors of production. Sounds kind of mysterious.
Well, there are four main ones: land, labor, capital, and enterprise.
Okay, break it down for me.
All right. Land is about natural resources,
Mm-hmm.
things like oil, minerals, forests, even fertile land for farming. Labor is the human effort involved,
Right.
from the farmer planting crops to the software developer coding away. Capital. That's the tools and infrastructure we use: factories, computers, transportation networks, things like that.
So those are more like the physical things.
Yeah, and the human effort. But then there's enterprise. That one's a little different.
Yeah. What is that exactly?
Enterprise is the driving force that brings it all together. It's about entrepreneurship, innovation, risk-taking, that spark that ignites the engine of production, you know.
So it's like the mastermind behind it all, the one who figures out how to make it all work.
You got it. Think of someone like, say, Steve Jobs.
Oh, yeah.
He had the vision to create, the guts to take risks, and the ability to bring people and resources together. That's enterprise in action.
Wow, that's a great example.
Yeah.
So land, labor, capital, and enterprise. Those are the foundations.
They're the building blocks of pretty much everything we do in the economy.
And understanding how they interact is key to, well, understanding how economies work, right?
Absolutely.
I'm starting to get the picture here. But how do we actually visualize these relationships, especially when it comes to trade-offs and using things efficiently?
Oh, that's where the production possibilities frontier comes in, or PPF for short.
EBF.
It's a visual way to represent all the different combinations of things an economy can produce when it's using its resources as efficiently as possible.
So it's like a snapshot of what's possible given what we have to work with.
Precisely. Think of it as a graph with two axes, each representing a different good or service. The curve on the graph shows the maximum combinations of those two things the economy can make at a specific time. Operating on the curve means you're using everything efficiently. No waste.
So that's like the sweet spot of productivity.
Exactly. Now, operating inside the curve means there's some inefficiency. Maybe resources are sitting idle or not being used to their full potential.
Like having a powerful engine, but only running it at half speed.
A perfect analogy. And operating outside the curve. Well, that's just not possible with the resources and tech you have at that moment. It'd be like trying to bake 10 cakes and 100 cookies when you only have enough for one or the other. Something has to give.
Okay, that makes it super clear. But these curves, they're not fixed, right? Things happen in the real world that can shake things up.
Absolutely. The COVID-19 pandemic is a prime example. It totally shifted PPFs around the globe.
Yeah, I
Suddenly,
agree.
countries had to prioritize medical supplies, even if it meant cutting back on other things like cars or electronics.
Tough choices.
Yeah, some tough choices forced by those opportunity cost decisions.
It's like the whole world economy had to adapt overnight. What other things can reshape those curves?
We'll think about major events like wars. After World War II, so many countries had to focus on rebuilding their infrastructure.
Yeah.
And over time, as they recovered and innovated, their PPFs actually shifted outward.
So they could produce more overall.
Right. It shows that these curves aren't static. They change with technology, resources, and global events.
It's like this giant, constantly moving economic puzzle.
That's a great way to put it.
Speaking of moving things around, how can we become more efficient with what we've got? It seems like specialization might be part of the answer.
You hit the nail on the head. Specialization or division of labor is key for boosting efficiency.
Okay.
It's about focusing on what you do best and breaking complex tasks into smaller steps. Like, think about Henry Ford's assembly line.
Oh, yeah.
It revolutionized car production by having each worker specialize in a specific task.
It's like a well-oiled machine, everyone with their part to play.
Exactly. That specialization allowed Ford to increase efficiency and output dramatically.
But isn't there a downside to all this specialization? I mean, it could get pretty repetitive and boring for the workers.
That's true. There can be downsides. It can lead to increased productivity and economic growth,
Okay.
but it also might lead to job dissatisfaction for the workers.
So it's a trade-off, like everything else. More efficiency, but potential costs to worker well-being.
Yeah, finding that balance between Efficiency and worker satisfaction is key.
Now, this specialization, does it also play out on a global scale?
Oh, absolutely. That's where comparative advantage comes in. Countries tend to specialize in what they can produce most efficiently compared to other countries.
Yeah, so each country focuses on what it's best at.
Right. That's why you see certain regions known for specific industries, like Brazil and coffee.
Okay, because of the climate and resources.
Exactly. Or Germany with engineering and car manufacturing. Each country brings what it's good at to the global market.
Like a global team project?
Exactly. Everyone contributes their strengths for the best outcome.
Okay, I like that analogy. But who decides what gets produced in the first place? Is it individuals and businesses, or does government get involved?
Well, that really depends on the economic system in place. There are three main types:
Okay.
free market, command, and mixed.
Hmm.
Each system has its own way of answering the big questions: what to produce, how to produce it, and who gets it.
All right, let's unpack those. What's a free market economy?
In a free market economy, things are mostly driven by supply and demand, with minimal government intervention.
Okay.
Businesses and individuals make most of the decisions about what to produce, how to produce it, and who gets it.
So it's like the market itself guides things.
Pretty much. Think of the U.S. Lots of innovation and entrepreneurship, but it can also lead to some big income gaps and economic ups and downs.
So there are benefits and risks to consider.
Always.
What about the other end of the spectrum, those command economies?
In a command economy, the government controls pretty much everything: resources, production, prices, even wages. Cuba is an example of this.
Oh.
The theory is this can promote more equality and make sure everyone's basic needs are met. In practice, though, it can struggle with efficiency and innovation.
I see. So the government is the central planner, making all the big decisions. It could be more equal, but I can also see how it might stifle creativity.
Yes, central planning can be effective in specific situations, like during wartime when you need to mobilize resources quickly.
Hmm.
But over the long term, it tends to create issues like shortages, limited choices for consumers, and that stifling of innovation you mentioned.
Got it. So free markets can be dynamic but unequal, while command economies can be more equitable but inefficient. What about that mixed option?
A mixed economy, like the name suggests, combines elements of both.
Ah, makes sense.
Most developed countries these days fall into this category. Like the UK, you have market forces driving things, but the government also steps in to provide essential services, regulate certain industries, and help redistribute wealth for social welfare.
So it's about finding that balance between the market and the government.
Exactly.
Yeah.
Like the UK has the NHS, which is public health care, but you can also opt for private health care if you want.
It's like each country is trying to find the right recipe to create a healthy economy.
That's a great way to put it. And that recipe is always being adjusted, as things change. There's no one perfect solution.
This has been incredibly insightful. I'm already feeling way more confident about my grasp of basic economics.
That's good to hear.
Before we move on, let's recap for our listener what we've covered.
Sure.
First off, economics is a social science. It's all about studying how we behave and the choices we make, especially when we can't have everything we want.
And we make those choices in the face of scarcity, that fundamental problem of limited resources versus our unlimited desires.
Yeah.
Every choice comes with an opportunity cost.
Right. The value of the next best alternative we have to forego. To really get how economies tick, we need to understand the factors of production.
Yes, those essential ingredients: land, labor, capital, and enterprise.
And to see the trade-offs and possibilities, there's that handy tool, the Production Possibilities Frontier, or PPF. It shows us what an economy can produce when it's running at peak efficiency.
And remember, real-world events like pandemics or wars can shift those possibilities.
Right, making us adapt and prioritize.
And then there's specialization and the division of labor. We often focus on what we're good at and break tasks down for greater efficiency.
And this even plays out on a global scale, with countries specializing based on their comparative advantage.
Exactly.
Finally, we explored those three big economic systems: free market, command, and mixed. Each has its own way of managing resources and answering those fundamental questions. It's amazing how much we've covered. I'm starting to see how it all connects. But before we wrap up this part of our dive, I know you have a thought-provoking question to leave our listener with, something to chew on as we head into the next segment.
Well, we've been discussing how economies operate, how resources are managed, and those different systems, right?
Yes.
What I'd like our listener to consider is, What are the underlying values and goals behind those economic choices?
That's a great question. It's like taking a step back and asking, what are we actually aiming for with all this economic activity?
Exactly. Think about the ethical considerations. Are there trade-offs between efficiency, fairness, and sustainability? How do we even measure success? Is it just about economic growth, or are there other things we should be considering?
Those are some profound questions,
Yeah.
and they really get at the heart of building a society that's both prosperous and just.
I think this next part of our deep dive will really get into those deeper questions, the values and goals that shape economic decisions.
This is going to be fascinating. I can't wait to explore those ideas further. But for now, we'll leave our listeners with those thought-provoking questions to ponder. We'll be back soon to continue exploring the world of economics.
Welcome back. Glad to be continuing this deep dive with you. I think this next part will really get to the core of what drives economic choices, those deeper motivations.
I'm ready for it. You left us with those big questions about values and goals. It's like there's more to economics than just the numbers and graphs, right?
Oh, definitely. Remember those normative statements we talked about? Those value judgments?
Yeah.
Well, they're not just random opinions floating around. They're often connected to those deeper ethical frameworks and the goals a society sets for itself.
Okay, I'm following you. Can you give me an example? How do ethical considerations actually show up in economics?
Sure, let's take labor practices, for example.
Hmm.
In a purely free market system, the whole drive for profit might lead some companies to, well, cut corners. They might prioritize low wages or have unsafe working conditions. But a lot of people would say those practices are just plain wrong, ethically.
Right, even if it means lower prices for the consumer.
Exactly. It's like there's this tension between efficiency on the one hand and ethical considerations on the other.
So different societies will find different ways to balance those. Right.
Absolutely. Some countries will have strong unions and safety nets to protect workers. Others might take a more hands-off approach, thinking the market will figure it out on its own.
It's a complex issue for sure. There's no one-size-fits-all solution.
Definitely not. These are issues with deep philosophical and moral dimensions. Economists can crunch the numbers, but ultimately it's up to societies to wrestle with those trade-offs and decide what reflects their values.
It really highlights how economics is tied up with politics, ethics, and even culture. It's not just about making the most money, it's about building a society that's both successful and just.
That's it, exactly. And that leads us to another important idea. Equity. Economic growth is great, but how those gains are spread out really matters.
Right, like they say. A rising tide doesn't lift all boats.
Precisely. If only a few benefit while many struggle, it can breed unrest, instability, even harm overall well-being.
So it's about the size of the pie, but also how you slice it.
Perfectly put. And different economic systems handle this equity issue in different ways. Remember our free market, command, and mixed systems. Each has its own implications for how things are shared.
Can you walk us through how those systems address equity? I'm curious how it plays out in reality.
Okay, let's start with free markets. Those who favor them will say they promote freedom and individual initiative,
Okay.
which can lead to greater wealth overall. But critics will point out that it can lead to large income gaps.
Right, because those who are already wealthy have a head start.
Yeah, it's like the free market can create a dynamic and innovative economy, but it doesn't automatically guarantee fairness or equal sharing of those gains.
So what about command economies? How do they approach equity?
In theory, they give the government the power to directly address those issues.
Hmm.
They can control prices, wages, and how goods and services are distributed. But in practice, you often see command economies running into problems with inefficiency, corruption, and a lack of individual freedom.
So even with good intentions, it can be tough to get it right. Finding that balance between individual freedom and fair outcomes is tricky.
Absolutely. And that's where those mixed economies come in. They try to take the best of both worlds.
The benefits of free markets with some government intervention.
Exactly. The idea is to harness that market energy while also addressing potential negative consequences.
So finding a middle ground that promotes both growth and well-being. But how do we measure success in that balancing act? Is it just about GDP, or are there other ways to look at it?
That's a really important question, and it's one economists are wrestling with more and more. For a long time, GDP growth was seen as the measure of success.
Right.
But now we're recognizing that it's not the whole story.
What are some other ways to measure economic progress? What should we be paying attention to?
There's a growing focus on measuring well-being more holistically, looking beyond just economic output.
So things like quality of life.
Exactly. Things like health, education, environmental quality, social connections. even happiness.
I love that. It's about recognizing that a good economy should benefit people and the planet.
Absolutely. This shift in thinking has led to alternative indicators like the Human Development Index, the Genuine Progress Indicator, and the Happy Planet Index.
Okay.
They all take a broader view of what a successful society looks like, considering factors like life expectancy, education levels, environmental sustainability, and how happy people are.
So it's about going beyond just material wealth and thinking about the quality of life in a more complete way.
Exactly. And this is changing how policymakers and economists think about economic policies, too. A policy that boosts short-term GDP growth might end up hurting the environment or social equity down the road.
So we need to think long term and consider all these different impacts.
Right, making choices that lead to lasting well-being for both people and the planet.
It's about maximizing well-being instead of just maximizing profit.
Precisely. It's about asking not just how much, but also how and for whom.
I like that. It feels like we're moving from a numbers-focused approach to one where values and ethics are front and center.
Exactly. And that's making room for new ideas and ways of doing things, like the circular economy, where resources are used more carefully and waste is reduced,
Okay.
or the sharing economy, where it's more about access to goods and services rather than owning them.
These new models sound fascinating. It feels like we're at the beginning of a big change in how we think about economics and its place in society.
I think you're right. And this shift is being driven by a growing awareness of how interconnected everything is, our economies, our societies, and our environment.
It's like that saying, everything is connected to everything else.
Exactly. And that brings us to another key aspect of modern economics,
Mm.
globalization.
Globalization. Everyone talks about it, but sometimes I'm not sure I fully grasp what it means. Can you break it down for me?
Of course. Globalization is all about the increasing connections between economies and societies across the globe.
Okay.
It's driven by things like better communication technology, easier transportation, and fewer restrictions on trade and investment.
So it's like the world is becoming a single giant marketplace.
In a way, yeah. We're seeing goods, services, money, and even people moving more freely across borders than ever before.
That opens up a lot of possibilities.
It does. New opportunities for growth and exchange, but there are also challenges.
Like what? What are some of the downsides of globalization?
Well, one challenge is the potential for greater inequality, both within and between countries.
Okay.
As companies look for the cheapest labor and the most relaxed regulations, jobs can disappear in developed countries, and workers in developing countries can be taken advantage of.
So the benefits and costs of globalization aren't spread out evenly.
That's the issue.
Yeah.
And that's why things like fair trade agreements, strong labor standards, and good social safety nets are so important. They can help protect people from those negative consequences.
It sounds like a tricky balancing act.
It is. And it requires countries to cooperate and talk to each other to make sure everyone benefits from globalization and that the bad parts are minimized.
This is such a multi-layered topic. There's so much more to economics than I ever realized.
It's a field that's always changing, and it touches almost every part of our lives.
We've covered a lot. Ethics, equity, well-being, globalization. What other big ideas are shaping economics these days?
One area getting a lot of attention is behavioral economics. It uses insights from psychology and sociology to understand how people actually make economic decisions.
That sounds interesting. I've always been fascinated by how our minds influence our choices.
It challenges the traditional idea that people are perfectly rational, always acting in their own best interest.
Right, like those perfectly calculating machines in those models.
Yeah, in reality, our emotions, biases, and social norms all play a role.
So it's more realistic.
And that has huge implications for how we design economic policies and programs. For example, understanding how people respond to incentives, how they frame choices, and how social pressure affects them can help us craft better policies to encourage things like saving, healthy habits, or even reducing energy consumption.
It's like we're using psychology to gently nudge people toward better choices without taking away their freedom.
That's a great way to put it. Behavioral economics gives us tools to understand and influence behavior in ways that can benefit everyone.
This is mind-blowing. It's like opening up a whole new world of possibilities when we combine economics with psychology and sociology.
Definitely. There's so much to explore at that intersection, and the more we learn about how people behave and interact, the better we can design those economic systems.
I'm so glad we went on this deep dive. I feel like my understanding of economics has completely changed.
Me too. It's always exciting to explore these ideas and see how they're changing the world.
We've covered so much: the fundamentals of economics, the ethics, the social aspects of different systems.
And we're just getting started.
I know. Before we jump into our final section, let's summarize for our listener what we've learned so far.
Sounds good.
We started with the idea that economics is about more than just numbers and graphs. It's about people, our values, and the choices we make.
And we saw how those choices are connected to deeper ethical ideas and what a society wants to achieve. Different societies will prioritize different things, finding that balance between things like efficiency and fairness.
Right. It's all about choices and trade-offs.
Exactly. And we discussed how economic growth is important, but not the only measure of success. Things like well-being, environmental sustainability, and making sure the benefits are shared fairly, those are all important too.
Absolutely. We also explored how complex globalization is. It creates new opportunities, but also brings new challenges.
Right, and the need to find ways to harness the good parts while minimizing the negative impacts.
We even touched on behavioral economics, using insights from psychology to better understand how people actually make those economic decisions.
And how we can use that knowledge to create policies and programs that are more effective and beneficial for everyone.
This has been a fantastic overview.
It has. It's so important to have these conversations and really wrestle with these big ideas if we want to build a world where everyone can thrive.
I couldn't agree more. Before we move on to our last section, I'm curious to hear your thoughts on what a truly thriving economy could look like in the future. What trends and possibilities excite you the most?
That's a great question. I think we're at a point where some really amazing things could happen, driven by new technologies, social changes, and this growing awareness of the need for more sustainable and fair economic systems.
I can't wait to hear what you have to say about that. But we'll leave our listener with that thought for now. We'll be back soon to continue exploring the world of economics.
Welcome back to our economics deep dive. I'm so curious to hear more about those exciting developments you mentioned, the ones that could really reshape the future of economies. Where should we start? Well, I think one of the biggest game changers is the rise of the digital economy. The internet, mobile devices, AI, they're changing everything.
Yeah, it seems like everything is going digital these days. But what does that actually mean for the economy as a whole?
It means we're seeing new types of businesses popping up, like those platform companies that connect buyers and sellers, or subscription services for just about everything.
So those lines between producers and consumers are getting blurry.
Exactly. It's more collaborative and networked now.
Interesting. And is that creating new opportunities?
Oh, absolutely. New opportunities for entrepreneurs, for innovation, for job creation. Think about the gig economy.
The gig economy.
Platforms like Uber or TaskRabbit. They connect people who need services with those who can provide them. It's creating flexible work and shaking up traditional industries.
So it's changing how we even think about work.
For sure. And it's raising big questions about worker rights, those safety nets, and the future of work itself. As more people move into this gig economy, how do we make sure they have things like healthcare and retirement savings?
Yeah, those are important questions. It seems like the digital economy is full of both promise and disruption, both opportunities and challenges.
It really is. And right alongside the digital economy is this other big trend. Automation, robots, AI, machine learning. They're taking on more and more tasks that humans used to do.
Automation. It's exciting, but also a little bit unnerving. What does this trend mean for the economy?
Well, on one hand, automation can really boost productivity, cut costs, and improve efficiency. And it can free up humans from those dangerous or mind-numbing jobs, allowing them to do more creative and interesting work.
So it's not necessarily about robots taking over completely.
Right, it's more about humans and machines working together in new ways.
But there are still those concerns about job losses, right?
Yes, and the possibility of widening that gap between the haves and have-nots. If machines can do a lot of the jobs that people rely on now, what happens to those workers?
It's a tough question. Some people are optimistic, thinking new jobs will pop up to replace the ones lost. Others are more worried.
It's definitely complex, and there's no easy answer. The important thing is to talk about these things now so we can prepare for that future of work and make sure everyone benefits from these advancements, not just a select few.
So being proactive, anticipating the changes, and making sure we have the right support systems in place for workers.
Exactly. We need to create an economy that works for everyone, not just those with high-tech skills.
It's a time of huge change and uncertainty, but also a time full of possibilities.
I completely agree. And economics has a crucial role to play in helping us navigate these changes and build a future that's more sustainable, more equitable, and ultimately more prosperous.
This deep dive has been an amazing journey for me. I feel like I gained a whole new understanding of economics. It's not just about theories and models, but it's a way to understand the world and make it better.
I've really enjoyed exploring these ideas with you.
Before we wrap things up completely, let's give our listener one last thought-provoking question to take with them. What kind of future do you want to see?
That's a great one. I'd encourage our listener to think about their own values, their vision for the future, and what role they want to play in shaping that future. What kind of economy do you want to live in? What kind of world do you want to leave behind? These are big questions, but they're important ones for all of us to think about.
Those are powerful questions, and I think the tools and insights we've discussed today can help us make better, more informed choices as we navigate the economic landscape. Thank you for joining us on this fascinating journey.